What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for e.l.f. Beauty stock. And this one I have known about for several years now, but I just started buying this past week because the stock has been falling so much. In the last year, the stock is down 70%, dropping from over $200 a share to now down to $64 a share. So, we're going to do some analysis to see what this company's financials look like, as well as the valuation. And right off the bat, we're looking at a $3.6 billion company. There's only 475 employees. And if you look at the history of this P ratio, you can see that for the last 5 years, it's traded very rich. It traded, up to 100 times more than once. And typically it's right around a 65 times earnings, right? And so now we are trading down to really under 40 times earnings. And on a forward basis, we're looking at about 18 times earnings because this is a $64 stock and they are expected to do a little over $3 of EPS, which means we're paying, okay, so roughly 19 times earnings, which is very cheap, especially for a company that normally trades at 60 times earnings. Now, yes, their growth is expected to slow a little bit, and well, kind of a lot of it, but that's probably a big reason why the stock has been falling. But still, this year they're growing 27%, and then next year they're going over 10%. As far as I'm concerned, a 19 PE ratio for that sort of growth is definitely undervalued. So that's the first piece of good news we have going for this. Then we look at their revenue chart, and as you can see, these last couple of years have been outstanding. They've gone from, just a couple of years ago, they were doing $380 million a year. And last year they did $1.3 billion of revenue. Keep in mind, this is a $3.7 billion company only. And the net income, it looks like it's been struggling the last couple of quarters, but really on an annual basis, it still is outstanding. 2021, they did $6 million, $21 million, $61 million, and then $127 million of bottom line net income for last year. So there is definitely some volatility there and definitely some not the greatest trend these past 6 or 7 quarters, let's say, really just these past 4 quarters, you could say. But still, on an annual basis, it's not bad. And the cash to debt ratio has been getting slightly worse, you could say. We're up to $200 million of debt and 70 million in cash, which is not great, but it's not horrible either. Shares outstanding, not really moving much. That one, it's basically flat, so that's not really a problem. Let's look at their profit margins here. I like to look at it on an annual basis. So let's go back up here and let's go to annual profit margins. We have only 2% in 2021, then up to 5.5%, 10.5%, and now we're up to 12.5%. So another good sign. The margins have drastically improved for the last 4 years straight. And one of my favorite things that I've found out about this company, as you can see right here, is e.l.f. has achieved a remarkable 24 consecutive quarters of market share growth, showcasing its strength against nearly 1,000 cosmetics brands and its ability to retain consumer attention. Then talks about how digital strategy is substantial. Their online presence captures nearly 30% growth year over year in digital consumption. So there's lots of great things going for this stock. And notice I don't have a huge position in this yet, just because again, I could see it coming down to $55 a share. I think worst case scenario that's somewhat realistic is probably $55 a share. I mean, when you look at the 5 year chart, you can see that in what, a little over about 3 years ago, a little over 2 years ago, it stalled out at about $55 a share for a while. And I could see maybe, I mean, since then, it's pretty much just been going up and up and up and up and up. So I could see it maybe coming back to those levels, but $55 a share is probably the bottom if things got really bad. And who knows, maybe this could be the bottom, but just to be safe, I only have what, $1,100, $1,200 in here just to be safe in case this thing drops another 10%. I don't want to lose a bunch of money. So we'll see what happens. But what I can say is that the growth is there. Even if the growth is slowing, which it looks like it might slow a little bit, they're still putting up 10 to 27% revenue growth, and EPS is expected to go from 3.1 to 3.3 to 3.6. So I don't mind paying 19 times earnings for this. I really don't. I mean, if they're growing market share, they have consistent growth. I don't see what the problem is here. So that is my analysis for e.l.f. Beauty. Let me know what you guys think down below, and I will see you in the next video.